Minimum line items under the IFRS and under the Ind AS. So under the IFRS, when we read IAS 1 deals with the presentation of financial statements, IAS 1 specifies the minimum line items that are required to be disclosed either on the face of the financial statements or either on the notes. So it specifies the minimum requirement. One need to understand it specifies the minimum requirement rather than a prescribed format. So whenever a company is applying IFRS, it has no specific format. It specifies the minimum line items that are required to be disclosed. Now, when we come to Ind AS, Ind AS, the financial statement line items presentations are dealt by Schedule 3 of the Companies Act 2013. So under the Ind AS, the line items presentations are governed by Schedule 3 of the Companies Act 2013. It also do not have a specific format, so both of them require the minimum items to be presented in the financial statements. Now, the second point that we want to discuss apart from the line item is the item to be presented in the financials in the primary statements. So it require all those line items that are require. I'm talking about separate presentation rather than clubbing it under the other expenses or other assets and other liability. A separate presentation is required when it makes sense. When it makes sense, which means when it is going to provide or enhance the information to the user of the financial statement, or if it is important and relevant to understand the position of the entity to better understand the financial position or the operations of the entity, if it is going to be meaningful and it should be material. Now when we come to Ind AS, it's governed by Schedule 3 and they have their own threshold. They quantified what do we mean by material. If any of the line item which either exceeds 1% of the revenue or 1 million INR, 1 million INR higher off. If any of the line item exceeds 1% of the revenue, either 1% of the revenue or the 1 million INR, 1 million INR, whichever is higher, then in such a case they are required to be disclosed, presented in the financial statement separately from other items rather than clubbing on the other assets and other liabilities. So these are certain items that we need to take in care of. Another point that one should know it's regarding the exceptional items. The exceptional items under the IFRS and under the under the Ind AS. Under the IFRS, there is no specific terminology given for the exceptional items. Whatever we have discussed is anything which is going to provide material information to the user of the financial statements to make judgment and to better understand the financial position or the results of the operation. Then in such a case, they require separate disclosure. But under the Ind AS, the concept of exceptional items still exists. It require separate disclosure. Exist. Do not exist. There's no concept of exist. There's no concept of exceptional item in the IFRS. However, there is concept of exceptional items in the Ind AS which require separate disclosure. Note: extraordinary items are not covered under both of them. They do not require separate disclosure, which means they are prohibited to disclose under both IFRS and Ind AS. So this is a small video on exceptional items and separate disclosure, separate presentation for the financial statement line items. Thank you.